चलिए साहब।
Hello, dosto. Namaste, sat sri akal. So, continuing our weekly discussion on some important topics, as you know, in this Halchal discussions, we prepare the ground and plant some thought seeds about some important matters every week. This week, we actually selected a very topic, which is a very good topic, which is, impacts us all, which is interest rates, economy, and employment, how it is going to be. And we thought about, inviting some academics or important, economists first. But then we are also aware that a lot of this information is available through news channels and online. And also that, a lot of people have an opinion that these kind of a forecasts by economists fall in the same category as the weather forecast.
Yep.
So anything can happen. So it's quite challenging area. And I know we are very fortunate to have Amar Nagi ji amongst us, who has a lot of experience in this area and talks a lot of sense. So I thought, actually, I persuaded Amar to share his opinion about it. So thank you, Amar, for your kind gesture to share your expertise and your experiences in this area with us. So please tell us what do you think about these forecasts, particularly on interest rate, economy, and employment.
Thank you, Avnish ji, and thank you for saying those kind words. I don't think so I'm worth it, but I take it with the folded hands. Thank you. I'll try my best. You pointed out rightly that it is just like weather forecasting. और होता ही है साहब, इसमें the best guide we have is what happened in the history. क्योंकि no matter what we say, history often repeats itself, because एक जनरेशन के बाद अगली जनरेशन जो कि 25-30 साल के में आ जाती है, वो पिछले वाले जो जनरेशन है और जो नई जनरेशन है वो पिछले वालों से कोई लेसन लर्न करती नहीं है, और जो पिछली है वो भी भूल भाल जाते हैं. चलो भाई अब नया, लेट्स गो विद द फ्लो इन द न्यू way of thinking, the new data coming, the new forecast and everything. So all my effort would be just to show you a brief history of the last 20-30 years, how the interest rate has changed, and how they have unfolded whilst they were falling, and when they were high early in the 90s, what was the scenario in terms of bank rates, home loan rates, and your inflation, etc. So let me try and share my screen if I can, and bear with me if it takes a couple of minutes. All right, this is the first screen I wanted to share with everyone. See, Reserve Bank of Australia was established in 1959 by the government of Australia under a Reserve Bank Act. उसके बाद 25-30 साल तक ये उसी पॉलिसीज पे चलता रहा, and in 90s it was kind of re-mandated, और जो आज का उसका objectives हैं, जो आज के उसका mandate है, वो almost is similar to what was established in 1990s. So उसके 3 major objectives हैं जो कि they are trying to achieve. The first one is the stability of Australian currency. Now इसके लिए जो target given is very precise, between 2 to 3%. इसके कुछ reasons हैं, because जो हमारी comparative economies हैं जिनके साथ हमारे major trades हैं, they also follow the similar inflation target range. For example, United States is 1 to 2%, Canada is again 2.5% or thereabouts. तो हम भी अगर वैसा target maintain करें inflation के point of view से, so our currency will not lose value against US dollar or Canadian dollars or other major currencies. So that's why this inflation target, and the only lever they have to manipulate this inflation target is the interest rates, the cash rate which banks give you if you deposit the money with them overnight. The second objective they have is to maintain the full employment. Now this is a bit rubbery in terms of what is full employment. The definition itself is not very precise. So there is a term which they called NIRU, which is non-accelerating inflation, non-accelerating rate of inflation unemployment. What it means is that we have to have a certain level of unemployment, and if unemployment falls below that level, then that puts upward pressure on the wages, and hence this triggers an inflation cycle. So they want to maintain certain level of unemployment. Actually, they are not targeting employment, but rather a certain level of unemployment, which ensures that there is a pool of people available in case the demand goes up. They can draw upon, or the businesses can draw upon from that pool of people and maintain the wages under control. And the third point is the economic prosperity and welfare of the people. Now, this is generally defined as, people feeling secure in their jobs, the assets they're owning, they're kind of slowly increasing, should go up in the sense that others can come and enter the market and people can leave the market without disrupting too much the economy. So these are the main three objectives. Now, let's look at the first one, which is the inflation rate, RBI cash rate, and the standard variable home loan rate, which impacts most of us these days. Now, what I've done is I've plotted last 30 years data on this. The top line that you see here, as a black line. The top line is the standard home loan rate. The orange line that you see is RBI cash rate, and the blue line that you see is the bottom one. That is the inflation rate at any given point in time. So what you will notice is that back in 80s and 90s, the inflation rate was around 8%. Here, if you see around, say, 89, 90, around 8%. And to bring the inflation rate down to within their 2 to 3% range, which is depicted by these two horizontal lines that are put in, they want to keep the inflation within these two lines. So to bring that blue line within that bounds of that gray lines, they have to increase the RBI cash rate to about 14% at that time. And the other thing you will notice is that the orange line has always been above the blue line. That means the RBI cash rate has always been above the inflation rate. What has happened in around, if you see 2016 or thereabouts, the RBI cash rate was lowered even below the inflation rate. That means it was essentially negative. So if you borrow the money and invest into any sort of asset, you will be benefited regardless. And that's why sort of people, borrowed up to the hilt up to their eyeballs, and invested in all sorts of assets, be it property or shares or stocks or bonds and everything. And they were making money because the money was available too cheap. It was below the inflation rate. And now, as I've seen via the last, 2 or 3 years, the inflation has shot up. And the blue line, again, as you can see, the inflation is about 6.5% or 7%. Now, if you compare that with the 80s, when the inflation was 7-8%, the bank cash rate was about 14. So you can see where it is actually heading. There is a lot of upward pressure upward pressure will remain in the coming few months and few years, actually, to bring this inflation rate down to within 2 to 3% range. Agar वैसे भी हम देखें कि they are targeting 2 to 3%, say they bring it down to 3%. So historically, you will see कि जो बैंक का cash rate है, that is about 2.5, maybe 2.5 to 3% above the inflation rate. What that means is, if they're targeting inflation on the upper end, say around 3%, add another 2.5%, the cash rate will be around 5.25 or thereabouts before the inflation is under control. And then the home loan, you add another couple of percentage points. So 7.5% will be the home loan rates. So that's the scenario that has happened. So I don't see it, unfolding in any different way going forward. Although there is a talk saying, look, there is an economy is more debted, लोगों के पास लोन ज़्यादा हैं. लेकिन in terms of income अगर आप देखें तो back in 70s, 80s में भी लोगों की income नहीं थी बहुत ज़्यादा. And because of the privatization, what triggered at that time excessive loan taking by the people were actually the privatization of the banks. So banks were lending very freely suddenly. When Commonwealth Bank was privatized, and Westpac Bank was also it was private, but with very strong controls. So when those controls were loosened, they also started lending, and the NAB and the other banks came into ANZ, came into play, and the money, they started sort of lending money quite aggressively. And that's why the inflation came into play. Now there is an added thing, people say, the supply chain disruptions and all that. Now supply chain has been fixed almost now. So it will flow through the system, but it is this cheap money supply, which has caused the inflation last time around. And I believe it's a similar sort of scenario which is causing the inflation right now. It will take a lot more effort by the RBA or even the US Federal Reserve or the Canadian Bank, Canadian central banks, to increase the cash rate up to, I think, about 5.5%. Now, just to put in perspective, the Bank of New Zealand, they have already raised it beyond 5%. So, we are heading there sooner or later. Now, the next slide I want to share with people is about the unemployment. Now, here what I'm trying to show is the RBA cash rate, total unemployment rate, and the net migration inflow. Because what affects the inflation, essentially the wages, and they put the cap on the wages by bringing more and more migrants, skilled migrant, unskilled migrant, or whichever is they feel there is a shortage in a particular trade or profession, they bring it in. Now, if you again look at from 1980s to around 2000, the migration was very low. It's around 50 to 100K, 50,000 to 100,000 persons per year they were bringing in. And migration coming in at about 50 to 100K, RBA cash rate was about 6 to 7%. And that's what the scenario before the start of this century, 2000. Now, starting from about 2000 and say to 2017, 18, you would see that is what they call the Goldilocks scenario, when everything was kind of in balance. Like the migration was high, about 150 to 200,000 people every year coming in, as you can see in the green bars. RBA cash rate was around, but they were around 5% or thereabouts. And the unemployment rate in the black line, as you will say, that was stabilizing as well. And that is what they call is the Goldilocks situation of economics. In economic terms, in the whole economic various factors were sort of placed in such a way that they were just perfectly balanced. And the unemployment at that time was about 5.5%. So the thing to note from this graph is that what is called the full employment historically has been unemployment about 5.5%, whereas currently our unemployment is below 4%. It's 3.5, maybe 3.7%. So there's plenty of room for the RBA to still keep rising the interest rate and still maintain their obligation of ensuring full employment. But because unless unemployment hits 5.5% to 6%, they can still claim it is full employment, and we don't have to worry about tweaking the interest rates or lowering the interest rates. So there is a lot of room for the RBA to move up. There is a lot of reason why they would move up. So my two prediction would be that, look, it is going to go up and probably top 5%. So that's where I see how they will impact the housing, etc. Now, that's a totally different story, because the housing is currently there's a short supply of housing, and there's a lot of migration going to happen in the next few years. Even in the last year, they have brought in, or last 2 years, they have brought in about 450,000 students plus new migrants in Australia. So unko bhi rehne ke liye accommodation chahiye. So that will put upward pressure on the rents and therefore the housing. So I don't see any major crash coming in the housing, but definitely there'll be rise in unemployment, and there'll be interest rates will be rising. So unless you have a good buffer in what if you have borrowed something, you should have a good buffer to accommodate at least interest rate going to 6 to 7% if you got a home loan interest rate we are talking. So that's where it is heading, mate, and that's my two bobs worth. So let's not get too excited about the interest rate coming down in a year or 6 months. That's my thoughts, essentially.
So this particular chart from unemployment and cash rate looks positive. Okay, we have a lower unemployment, which is a good news, I guess, and RBA has got room to move the cash rate. If you can go back to the previous chart where the cash rate and inflation.
This one?
Inflation, yes. So yeah, there was a period, from 3 years or so when the cash rate was lower than inflation, which is good. But that's not the story anymore. So you think people have overborrowed just in 2 to 3 years that it is now causing much. There are other factors maybe as well. So let me come to those. You mentioned New Zealand. And I saw in the news lately that they have actually declared official recession because of their commodity prices. Australia is also another example. We had heard the economic challenges because of COVID, because of relationship with China, those kind of challenges. So it was quite a scary picture. But when the budget was declared, all of a sudden it was, oh my God, they found money somewhere.
We were in
And
surplus.
we are
We were in
looking like,
surplus.
we're going into surplus and plenty of cash.
I think people were over leveraged even before COVID. And they continue to RBA के बारे में मैं कह रहा हूँ, वो जब आपने interest rate नीचे करते जा रहे
How
हैं,
do you reconcile all that?
Yeah, look, वो जो interest rate नीचे करते जा रहे थे ना, उससे पहले RBA के sorry COVID के आने से पहले, what they were hoping that people will borrow and spend more money and therefore stimulate the economy. अब लोग इतने वो नहीं है, they borrow but they don't spend, they invest in the assets. And that's why the asset prices went up, almost in a fashion which they haven't seen before, 20-30% every year, going up between 2020 and 2022 2023. So ये बात ठीक है कि उसके पास they found the money. So what they might have done unknowingly, they actually overstimulated the economy during the COVID phase. They splashed out a lot of cash, which went into people's savings. And then when COVID sort of left us, or the economy sort of came back to some sort of a normalcy, people found there were a lot of money in their bank, and they still have got their jobs. So they started spending, and then it becomes a trigger. When people start spending, well, obviously economy stimulates, the more jobs were created, and we were in the upward roll on that front. So suddenly they found the money, because or Australia में तो खास करके दो, and that is primarily because of the royalties coming from coal. So our commodities are selling brilliantly and helping us out through this phase. So although we say कि यार economy नहीं है, लोगों का GST नहीं आ रहा, tax नहीं आ रहा, ये नहीं वो सब ठीक है, but it is a lucky country in that sense, and proved to be lucky country again.
कहीं ना कहीं से कुछ ना कुछ हो जाता है.
हो जाता है, because I think now iron ore is shooting up. I mean, जब inflation बढ़ेगा तो we are a commodity rich nation, तो उसमें commodity के price भी बढ़ते हैं, तो government के पास पैसे आते हैं, then they splash out in government programs or infrastructure projects or funding and all that kind of stuff. So इस वजह से मुझे ऐसा feel होता है कि I think we will be all right, as long as during this period you can keep your job, or people are employed, and if they've got investment properties, they are rented out, we are fine. If you're unfortunate enough
which is looking good, because unemployment rate is very low, and so I guess that is a good scenario to have.
Yes, that's good stuff. So that's all I have to share with you guys, that of course the interest rates will go up, but it won't be catastrophic. That's how I feel is. It will go up to 5.5%, which looks scary. But as long as people have jobs, I mean, they should be all right. I think they should be fine. Yeah.
Wonderful. No, thank you very much, Amar. I think it is a very informative session, and thanks for sharing all that information with everyone. Hope people can benefit and share and comment, and we'll be happy to discuss more things.
Happy to discuss. Yeah, sure. If people have some comments, please write your comments, and we try to respond as best as we can. Okay, thank you, sir.
Wonderful.
Thank you.
Thank you.